Bob, I'll start with you because, S3 produces the most important sort of pool of short data for the market to look at. And certainly when this first happened, there was a ton of short covering that just put a fire under these stocks. Is that still the case? Is this all about short covering?
We think so. It's definitely shorts cover and reload at a higher level. It's all technically driven. And the real question is, the Kardashians are still here, right? You have to apply that art to socially mobilized investing. And what Rory Kitty has done, he has socially mobilized financial publishing, and he has First Amendment rights to do so. This drives financial professionals totally crazy. They don't know how to model it. It's a risk management problem. And, the meme stock community yells about naked shorting and counterfeit shares when short sellers are making money. When short sellers are losing money, they're saying, hey, this is crazy. It's not right. We don't run markets this way. It's a new world. Technicals drive the market. And that's, I think, what David Einhorn was talking about a little while ago. He's saying the flow of money, no matter how it happens, is driving stock prices.
All right, so if Einhorn's on board, does that mean professionals are in this rally, Bailey, or is it still, Wall Street bets? Is this a retail rally?
Well, when I talk to folks who help advise hedge funds, they call out the fact that Wall Street wants to get in on trades. So to say it's strictly retail traders buying the shares, or to Bob's point, shorts covering those positions, when I talk to investors, they really are saying quants are buying it. Momentum traders are getting in and out of some of these trades. When you look at the sell-off we've seen this morning, is that momentum traders realizing that maybe this isn't peak, at least for now, and trying to take some profits off the table? Or to Bob's point, I'd be interested, Bob, if you're expecting to see more short sellers piling into that, is that driving shares lower? When I look at the fundamentals and some of the updates AMC's given with that at the market offering, with their debt for equity swap, is that going to provide more fuel for shorts to take positions now?
Bailey, you're onto something very, very, very important. So what we've done at S3 is that we have solved also for the long side of the market. And we can actually anticipate aggregate buying 45 days before 13F is published. And one of the things we noticed this time around is that quant funds, the quant fund cohort, was actually buying meme stocks well before Roaring Kitty actually published his meme. So they were listening to the sentiment in the marketplace and buying. It wouldn't surprise me is that if they were part of the rally as well.
I wonder, we get obviously S3 data on the Bloomberg terminal. Can you see the uptake since 2021? I mean, who's buying or using your short selling data?
Well, that would be the world. That's pretty much everybody that's involved in the financing markets and or shorting a stock. There's over almost 750 firms that actually use our data on a daily basis. Here's the point. The average short interest to percentage of float across our entire data set is about 4.68. Right now, you have AMC, GME, roughly 20%, I think. GME is 25%, AME is 19%. So they're 4 or 5 times the average. Is that extreme compared to 21? Not really.
What were they then?
Things have changed. Well, they were over 100. We would say there's never anything over 100%, but the rest of the world says it's 150%. So the magnitude is not there, but you take quant fund buying, you take the expensive borrow, you take the 4 or 5 times the average of short interest, and the cost of the borrow going higher, that is a tinderbox waiting for a meme to happen. And that's exactly what happened.
Well, Bob, I want to focus on the cost to short some of these stocks. When we talked about Trump media, the cost of that was astronomical. People really paying over $1 per share of short stake in a weekly span. Is the cost to short GameStop or AMC rising, and how does that compare to what we saw back in 2021?
Well, they're nowhere near 2021 levels, but DJT is at meme stock levels in 2021. I think it's 300%. So let's put that into context for the audience. If I was short $10 of a stock, paying 300% to borrow it, I'd be out of my $10 in 120 days. So the expectation of the marketplace is this stock will go down a lot more than over the next 120 days. Otherwise, you've run out of capital to make your bets.